I'll just get rid of that to clean up the chart here. I'll just kind of keep looking through price. We can see again, we create inefficiency here as price moves to the upside. Price then spikes down, fills the inefficiency, and then continues back up. And we can see in this instance, we actually do have a order block. We can see price breaks structure here, taps in, one tap into the order block, two taps, and basically price fails to create an actual true higher high, and then continues to break to the downside. And then if we look, we have some inefficiency right in this area, and we also have inefficiency in this area, and then inefficiency in this area as well. And we can see, if we just drag that to the upside, because initially as we were looking through the chart, we would have this overall area, which is a very large area, especially given that it's the monthly chart. This is 1,500 pips. As price continues to move up, we know that this is all inefficient price action, and that price will likely come to these areas. And what we can see is price then does gravitate up to it. If we're just looking at a few more examples, you can see inefficient price action here. Price seeks the efficiency, fills it to the T, which is actually also a refined order block entry as well. It breaks structure down here. And you can see that all these concepts do play hand in hand. We use order blocks as the main entry style, the actual point of interest that we're looking at, but we can use order blocks as overall points of interest for targets and such things, because what we can see here is we had the inefficiency that I called out that was here. We did fill it, but not quite. And what we can see is, although price moved and this returns back to it over, almost 4,000 days later, we can see that price does eventually come back to fill the inefficiency. And in this case, what we can actually see is this is also an order block entry. Price taps into it. So we've cleared out the liquidity that was sitting, or the imbalance that was sitting here. And then we actually tapped into the order block, and that's what has caused price to then move to the upside. If we were taking buys down in this area, we'd be looking at a few key areas of targeting, and which would essentially be inefficiency here, and ultimately filling the inefficiency here. Now, we don't know if that's going to play out exactly, but if we were to take positions down here on, say, a 5-minute entry, looking at, targeting this inefficiency, that's over 4,600 pips, which could make you some hefty percentage. So you have an overall idea of what to target from a monthly standpoint, of course. And we can just see, again, price is efficient. We create an inefficiency, we break through it and continue being overly efficient in price. We create an inefficiency, we fill it, we carry on, we create an inefficiency, we fill it, and continue on to the upside. Price is efficient, and basically we get to current price, where overall pricing is relatively efficient at this current stage. And it gives us a really great understanding of where price is likely to be gravitated to eventually. It's not saying that it's just going to start blasting to the upside to fill these particular areas right off the bat. We could still tap down, create some sort of point of interest and then go, or, as price we see, we can make a whole new bear trend and then eventually down the line fill these inefficiencies. Because what we can see here again is we had small bits that eventually got filled, but this small little bit of inefficiency took well over 2,800 days to finally get there. So it does take a lot of time, especially looking at the higher time frame charts. But what we can see on, say, we'll go down to an hourly chart just for a few more examples. We can see that price just recently, we had a rapid move to the downside. We create inefficiency here and here, and we can see price taps in, fills this area completely. This small bit of inefficiency gets initially tapped. There's some liquidity sitting here, which actually forms more sell orders and taps down. And then we can see price fills a little bit of inefficiency down in this particular area and continues up. Now, this isn't the main reason why price has reacted to these areas, but it's a good indication of where price is likely to start going. And as we can see, if I move just to the daily, for instance, you can see price has been efficient we had a little bit of inefficiency here, blasted through it. If you were trading just simply the inefficiency, looking for a buy, that wouldn't make sense. These are more or less for market understanding, order flow understanding, and ultimately a great way to use for targets if we were looking for positions. A final example would be if you bought in and around here, you notice this inefficiency, you could target in and around that particular area. And what you'd also see is we also have a daily order block. It broke structure here. So a couple confluences if you were, taking that retracement buy in that case, because obviously you would not have known that price was going to break to the upside at that particular moment. But that is inefficiency in a nutshell. It's a great tool to understand what price action is doing, and truly it's a measure of volatility, but the volatility will eventually be matched with pricing that rebalances the orders that were skipped, essentially created the volatility in the first place.